Hello everyone. In today's session, we are supposed to discuss Financial Accounting 3, Program Commerce, Semester 3, University Mangalore, Session 68. Recap of previous class to make distinction between dissolution and sale of firm, need for dissolution and sale of firm, learning objectives to make the students to analyze the concept of purchase consideration and its calculation, to prepare them for accounting during dissolution and sale of partnership firm, including piecemeal distribution. Learning outcomes. Students are able to analyze the concepts related to dissolution of partnership firm. The students are able to prepare accounts on sale of partnership firm. The session 68, which deals with gradual realization of assets. So, as mentioned in the study material, we have to discuss about the problems regarding the gradual realization of assets. The gradual realization of assets, we are supposed to deal on the following aspects: realization of assets taken over by the partners, payment of liabilities, and payment of realization expenses, followed by treatment of profit and loss account and treatment of reserves. So let us analyze all these concepts with a problem which is given in the study material, which is enclosed with your video. You can refer the study material to have a glance about the problem. So the problem states P, Q and R were in partnership sharing profit and losses in the ratio 5:3:2. The following was the balance sheet as on 31st 3 2020 when the firm was dissolved. Liabilities: capital P 45,000, Q 12,000, R 43,000, reserve fund 10,000, creditors 40,000, R's loan 10,000, assets: premises 40,000, plant 30,000, stock 30,000, debtors 60,000. Total of the balance sheet is 1,60,000. Additional information: it was agreed to repay the amount due to the partners as and when the assets realized. The assets realized as follows: on 1/5/2020 rupees 30,000, on 1/7/2020 rupees 73,000, on 1/9/2020 rupees 47,000. Prepare statement showing cash distribution. So that is a problem which is mentioned, and we have to go for the solution. And in the solution there are two stages. One is statement showing the surplus capital has to be prepared among the partners, and the second one, the piecemeal distribution of cash, that is settlement of liabilities including the capital. So first we can draw about statement of surplus capital. So statement of surplus capital can be prepared by having a particulars column and three partners equal column. The capital balance available of the partners as per the problem is 45,000, 12,000 and 43,000. Their profit sharing ratio 5:3:2. So the capital balance, we have to add the reserves which is given in the balance sheet of the problem, that is reserve fund 10,000, which is distributed in their profit sharing ratio 5:3:2. So P gets 5,000, Q 3,000 and R 2,000. Now the final adjusted capital is 50,000, 15,000 and 45,000 of P, Q and R respectively. So once you get final adjusted capital, first we can determine what is the smallest quotient of capital of the partner. If you refer the problem, Q has the smallest quotient of capital of rupees 15,000 for his 3/10 share. That means for 1/10 share, the capital should be 5,000. So respectively, we can multiply the 5,000 into 5, 5,000 into 3 and 5,000 into 2. So thereby we can get the capital of the partners in their profit sharing ratio. So hence the capital of P should be 5,000 into 5, 25,000, Q 5,000 into 3, 15,000 and R 5,000 into 2, 10,000. Now we can determine the excess capital. So the excess capital we have for P 25,000, Q nil and R 35,000. In the second stage, as two partners have surplus capital, again we have to determine what is the smallest quotient of capital. So in this stage, P has a smallest quotient of capital. For fifth share, his capital is 25,000. So thereby we can divide 25,000 divided by 5. So we'll get 5,000. So for 5 by 10, he has 25,000. So therefore, for R 2 by 10, he should have 10,000. So therefore, we can deduct 25,000 and 10,000. So the surplus capital now at this stage, P nil, Q nil, and R 25,000. So therefore, the order of payment, first we have to settle 25,000 which belongs to R, then 25,000 and 10,000 which belongs to P and R, and finally the 25,000 and 15,000 and 10,000 in their profit sharing ratio between P, Q and R in the ratio of 5:3:2. In the next stage, we are supposed to prepare the statement showing the piecemeal distribution of cash. So if you refer the balance sheet, there are liabilities like creditors, loan and partners capital. So we can take into consideration the liabilities balance as given in the problem. Creditors 40,000, 10,000 and capital of P 50,000, Q 15,000 and R 45,000. In the first realization it is stated they received 30,000 from the realization. So which can be used for the first payment of creditors. So after paying the creditors, the balance available, creditors 10,000, loan 10,000, P's capital 50,000, Q's capital 15,000 and R's capital 45,000. The second realization is 73,000, in which first 10,000 will be used for the payment of the creditors. Now the creditors balance will be nil. The next 10,000 will be used for the payment of loan, that is 10,000. Now the loan amount will become nil and the balance available amount which can be used for the surplus capital of R 25,000. After making this payment, so the balance available is 28,000. So this 28,000 which can be utilized for the payment of P and R in their profit sharing ratio, that is 5:2. So hence P is settled by 20,000 and R is settled by 8,000 rupees. So the final balance available after the second stage of realization between P, Q and R is 30,000, 15,000 and 12,000. The third stage realization, the firm has received 47,000 which can be utilized for the payment of surplus capital of P and Q in their profit sharing ratio 5:2. So therefore P is paid 5,000 and R is paid 2,000. Now the final balance as per the profit sharing ratio between P, Q and R is 25,000, 15,000, 10,000. So the surplus cash available for the payment in the last stage is 40,000 which will be settled in the ratio of 5:3:2. P gets 20,000, Q gets 12,000 and R 8,000. So the remaining balance is 5,000, 3,000 and 2,000 is considered as an unpaid amount or loss for the partners. So from this you can analyze how we can prepare a statement showing a surplus capital and how the piecemeal distribution process will take place. Thank you for watching the video.